My background isn't a fit. Is PE realistic for you? Look, private equity in Europe is one of the most competitive recruiting funnels in the world. Acceptance rates are lower than Harvard, and the first filter most funds use is your background. If you've ever thought, my background isn't a fit, you're not crazy for thinking it. But you might be wrong about what fit actually means, and more importantly, you might be targeting the wrong slice of the market. Today, I'm going to show you exactly how to assess whether PE is realistic for you and what to do next if it is. I'm Stefan, co-founder of Break Into PE. I started my career at Morgan Stanley in the tech investment banking team in London and then joined HG, one of the largest tech private equity firms, in under a year. Since then, I've coached hundreds of candidates across Europe and see them land offers at firms like KKR, Blackstone, Bain Capital, and many more. In today's video, I'll walk you through how European funds actually filter candidates, what to do if you don't tick every brand name box, and the exact pathways that work in practice, from second-tier IB and tier 2 consulting into mid-market investing, to investor relations and operating roles that later bridge into the deal team. So let's start with the hard truth. If you're aiming straight at the European large caps, think KKR, Blackstone, Carlyle, the interview invites mostly go to candidates from top investment banks like Goldman, Morgan Stanley, JP Morgan, and the MBB consultancy, so McKinsey, BCG, Bain. They also care about where you studied and how you ranked, whether that's LSE, Oxford, HEC Paris, Bocconi, or similar. None of that is about fairness or merit as a human being, it's about risk management. These funds are hiring tiny classes and want candidates who are already trained to a standard they can trust. That's the reality at the very top. But here's the mistake people make. They generalize that to the entire market. They assume, if I didn't come from Goldman or Bain, I have no shot. Not true. The work of private equity, finding deals, evaluating businesses, underwriting risk, executing value creation, is the same in a $300 million fund and a $10 billion fund. The badge on the door is different. The comp is different. The job, the craft is the same. And the European market is incredibly fragmented. There are hundreds of strong mid-market and lower mid-market firms, growth funds, sector specialists, and regional champions where your background can be a fit if you position it in the right way. Let me give you a story. A client, Akora Marta, started at a boutique tech investment bank in London. No bulge bracket logo, no target school halo. On paper, she was invisible to the mega funds. We built a narrative around what she actually had. Real exposure to vertical software, a hands-on role in building models, and the ability to talk like an owner about churn, net revenue retention, pricing levers, and all of the SaaS metrics. So what did we do? We targeted Iberian and pan-European mid-market funds with an active software thesis. She didn't waste a single application on funds that wouldn't read her CV. She landed 3 relevant processes and is currently advancing to the final round. Her background wasn't the problem in the first place. Her targeting would have been. So is PE realistic for you? Here's how I want you to think about it in Europe. Imagine 3 zones. In the green zone, you have top tier IB or MBB plus strong academics and language fit for the market you're targeting. If that's you, large cap and upper mid market are absolutely realistic. And your risk is under preparing the investor side of interviews because you assume pedigree will carry you. In the yellow zone, you're at the second tier or boutique IB or tier 2 consultancies such as Oliver Wyman, Strategy Ant, Roland Berger, Deloitte, etc. So you need sharper positioning and smarter fund selection. But mid-market and sector-focused funds are very much in play. In the red zone, you're outside investment banking consulting. You may be in Big 4 audit, equity research, corporate development, or you may be an experienced operator. Direct investing can still be realistic, but it's often a 2-step path. Bridge first into a more adjacent role, then into the deal team. So let's walk those paths in plain English. If you're yellow zone, say you're at a good boutique bank or tier 2 consultancy, your edge is focus. Pick a sector and a region. Build a fund list that matches that focus. In Europe, language and geography matter much more than in the US. If you're German speaking, the DACH mid-market region is important. If you speak French, France is the way to go. If you're in Iberia, you can credibly cover Southern Europe and pan-EU strategies. Instead of applying to 30 random logos, apply to 10 funds you could convincingly pitch on day one. Then prepare like an investor, not a candidate. When a partner asks, walk me through a business you like, they're not grading your memory. They're asking whether you sound like someone they'd put in a management meeting. So if in the red zone, say basically outside investment banking consulting, there are 3 realistic bridges. Number 1 is investor relations at a fund. You learn the platform, interact with the deal team, and over time you can move across if you show you can source, evaluate, and communicate like an investor. The second is portfolio value creation, a role embedded with portfolio companies to drive pricing, sales force effectiveness, procurement, digital transformation, everything that happens after you do the deal. If you're an operator, this is a powerful door in, and some funds elevate their best ops talent into operating partner roles. The third is a focused move into transactions. So transaction services deals at Big Four, corporate development in a sponsor-backed company, or a lateral into a lean M&A team. You compress the distance between what you do now and what an associate does every day. So here's another story. Marcus had 15 years of operating experience scaling services businesses in the Benelux region. No investment banking, no MBB. So we reframed his experience as a value creation playbook. Capacity expansion, SKU rationalization, pricing strategy, working capital. We targeted funds that own industrial platforms and explicitly hire operating partners. So he joined a pan-European mid-market fund as a value creation lead and now sits side by side with a deal team. That's not a consolation prize, that's private equity. So now let's talk about the elephant in the room. Timing and the European process. Europe is not New York. On-cycle for mega funds exists, but it's small and less deterministic. Off-cycle recruiting is active year-round, and headhunters play a central role. Here's the catch. You often get 1 real shot per headhunter per year. If you come in underprepared, you get tagged as not ready and invites dry up. That's why I'll just interview to learn is a very dangerous strategy in Europe. You learn in practice, but you prepare in private. When you sit down for a case or cold investment pitch, you have to sound like you're already live in the job. What does sounding like an investor actually look like? Try this as a mental checklist. Talk about the market, but quantify it. TAM, where it matters, but more importantly, the serviceable segment you've actually analyzed. Talk about the moat, make it testable, switching costs, network effects, or contractual stickiness that you can diligence. And talk about the money, the unit economics and cash conversion that support leverage. And talk about the mechanics. What would you do in the first 100 days and the 3 levers you would pull to hit your underwriting case post-closing? So let me model that for 30 seconds. Imagine a vertical SaaS business serving mid-market logistics operators in Europe. It's growing ARR at 20% with net revenue retention of 112%. Churn is concentrated in sub 50K accounts. Pricing is flat to inflation. Modules are underpenetrated. I like it because the switching costs are operational, not just financial, and the customer data footprint compounds. If I owned it, I'd expand modules into planning and compliance, reprice the long tail with usage-linked tiers, and pursue 2 bolt-ons in adjacent workflows. I'd underwrite downside case to low teens organic with a path to 20 via ARPU, take a leverage that matches cash conversion, and look for 2.2x to 2.5x MOIC in 5 years with secondary buyout or strategic exit optionality. That's how an associate talks, how an investor thinks. Not long, just specific. So if you're coming from consulting, you already know how to structure problems. The shift you need is from what's the right answer to what's the right bet. In consulting, need frameworks win. In PE, disciplined hypotheses win. Replace issue trees with investment thesis. Replace slides with levers. Replace interesting with underwritable. And be ready to go deep when someone pushes on one line of your model. So if you're coming from a boutique bank on the other side, your risk is underselling your reps because you think your brand doesn't carry you. The antidote is deal fluency. Have a crisp walkthrough of your best transaction where you can explain what the buyer saw, what you saw, and what you do to diligence if you had the data. Don't hide behind I can share details. Share what you can share and show how you think. Let's touch targeting again, because this is where most people waste a year. If your CV won't clear the mega fund, don't spray applications at mega funds. That's not ambition, that's self-sabotage. Build a list of funds where your language, sector, exposure and deal size line up. If you did consumer investment banking in Milan, target funds active in consumer, either based in Italy or covering Italy from a London office. Don't overcomplicate it. If you did infrastructure adjacent work in Paris, look at Core Plus and energy transition funds. If you're in audit but love sponsor-backed companies, move into corporate development in a sponsor-backed platform for 12 to 18 months. Then go to the fund that owns it or a peer. This is not settling, this is sequencing. And because someone will ask, how long should I prepare before I start interviewing? Not 5 years. You are never 100% ready. And the window is narrow. In Europe, most associates move after about 2 years in banking or consulting. Sometimes earlier, sometimes later, but there is a natural cadence. The right approach is a focused sprint, not an open-ended marathon. Give yourself 6 to 8 weeks of real prep. Technical drills that go deeper than quick-fire questions, 2 or 3 sector pitches you could deliver cold, a proper deal walkthrough with numbers you've sanity checked, and a networking plan that touches the right headhunters and the right principals at the funds you've shortlisted. Then move. The clock is ticking, and compound preparation beats endless preparation. Let's recap the big points so you leave with clarity. First, the very top of European PE filters aggressively for pedigree. Bulge bracket investment banking and MBB plus top universities. That filter is real, but it does not define the whole market. Second, Europe is fragmented and language sensitive. Choosing a region and sector and aligning your story to it increases your hit rate dramatically. And third, if you're not in investment banking or consulting, you still have viable bridges: investor relations, portfolio value creation, corporate development, and sponsor-backed companies. Many investors and operating partners come from those paths. And fourth, you only get a few real chances with headhunters each year. Don't learn in live interviews. Do the work in private so you can perform in public. And finally, you will never feel perfectly ready. Time box your prep, build conviction, and step into the process. If this helped, hit like and subscribe to be the first one to know about next insights. If you'd like to get in touch with us, go to breaking2b.com and book a free strategy call with our team. We'll run a quick diagnostic, show exactly where you stand, and map the shortest path for you to get into a private equity fund in Europe. Don't waste your reps, make them count. And I see you in the next one.